On August 14, 2020, lawmakers from Ghana's ruling New Patriotic Party, with their majority representation in the nation's parliament, hastily approved 5 agreements before going on recess. Chief among them is Agyapa Royalties Limited Agreement, a murky transaction seeking to allow the country to monetize its gold mineral income. The nation's Attorney General described the agreement as unconscionable. A group of civil society claimed it lacks the basic minimum of transparency, and UK-based Tax Justice Network, an independent research and advocacy network, said the Ghanaian government should urgently cancel and repudiate the deal and investigate all the parties involved for possible corruption and self-dealing. So why has the Agyapa deal triggered so much controversy across and beyond Ghana? First, let's unpack how the West African nation manages its mineral wealth. You see, Ghana is resource-rich. It has timber, gold, diamond, cocoa, bauxite, and oil. But like other African countries, it is plagued by a resource curse and operates as a rentier state. What's a rentier state? It's a term used to describe a nation that derives most of its revenue from renting natural resources, such as oil or gold, to foreign powers. Think of it like a landlord and tenant relationship. Ghana is Africa's largest gold producer, producing 4.8 million ounces in 2018 alone. But the country does not operate any of its gold mines. Instead, they are leased out to foreign multinationals, mainly from advanced economies. The leases are called mining concessions, which allows multinationals including Newmont Corporation, Perseus Mining Limited, Kinross Gold, and many others to legally mine for gold in Ghana. In exchange for their mining operations, the multinationals pay royalties to the Ghanaian government. Think of the royalties as rent payment by the mining companies for mining on Ghana's lands. The standard royalty rate in Ghana is 5%. However, some companies have negotiated a sliding scale royalty rate from 3 to 5% based on the price of gold on the world market. The Agyapa deal raises so many questions, so let's attempt to answer some of them. What is Agyapa Royalties all about? Well, in 2018, Ghana established the Minerals Income Investment Fund to receive royalties due the nation from mining companies. The Ghanaian government, through the Minerals Income Investment Fund, incorporated Agyapa Royalties Limited, a special purpose vehicle seeking to raise $500 million for development projects through a share sale on the London Stock Exchange. What is Agyapa Royalties Limited? According to Project Kingdom, an internal document from Ghana's Ministry of Finance, Agyapa Royalties Limited is a gold royalty company that will offer financing to mining companies that want to develop their mines in exchange for a royalty or other revenue-related stream. It will focus its activities on Ghana and Africa, and in the gold mining sector only. When and where is the company incorporated? The company was incorporated on November 5, 2019. It's worth mentioning that it had a previous name, Asase Royalties Limited, which was registered on February 28, 2020. The company was incorporated in Jersey, not New Jersey in the United States of America. Jersey is a British Crown dependency located in Channel Islands between England and France. Why was the name changed from Asase to Agyapa? According to Project Kingdom, the name Asase was selected in 2019, and on further investigation on the name, it was apparent that there are over 21 companies with the name Asase. Why was the company incorporated in Jersey and not Ghana? Well, the Ghanaian government claims it is seeking to take advantage of Jersey's status as a tax haven to cut out the associated high tax charges to the returns that will accrue to the state from the investments. What's a tax haven? A tax haven is any country that offers foreign individuals and businesses little or no tax liability. Are tax havens illegal? No, but they are controversial because they ensure secrecy and share limited or no financial information with foreign tax authorities. How will Agyapa Royalties Limited Jersey operate? The government of Ghana, through the Minerals Income Investment Fund, will maintain 51% stake in Agyapa Royalties Limited Jersey and sell 49% of the company's shares on the London Stock Exchange to investors. It will also list Agyapa depository receipts on the Ghana Stock Exchange. The Minerals Income Investment Fund will pay 20% of the mineral royalties received from the mining companies to the Minerals Development Fund. 75.6% of the royalties from the 12 producing mines will then be transferred to Agyapa Royalties Jersey. Remaining cash on hand can then be used by the MIIF for two things: a payment of 2.4% of all the mineral royalties to the Ghana Revenue Authority as revenue management fee, and the MIIF's own purposes, including the payment of salaries and other expenses. That's about 2% of all mineral royalties. Also, 80% of other royalties received will remain with the MIIF. That's royalties from mines not included in the royalty portfolio. Who are the directors of Agyapa Royalties Limited Jersey? Well, we are yet to know who the directors are, but according to the company's annual returns obtained by Tax Justice Network, the names Yaoba and Felicia Ashley were listed as authorized signatories when the company was incorporated. We don't want to speculate the identities of these individuals, but according to Ghana's Ministry of Finance website, Yaoba is the Chief Executive Officer of the Minerals Income Investment Fund, and Felicia Ashley is the Director for Human Capital and General Administration Division at the Ministry of Finance, and had previously worked at DataBank, an investment bank co-founded by Ghana's Finance Minister. It is also worth mentioning that Miracle Duka, New Patriotic Party Member of Parliament for Takwa Nsoam, witnessed the signatures. The document also listed the company secretary as Tom Williamson, a manager at Osier, the law firm used to incorporate the company. Is Ghana getting a good value for money? We don't know at this time. To answer that question, we will need to review the prospectus, which will include the company's financials. The Ghanaian government is yet to release it. You see, there are several methods used in valuing initial public offerings. But with the little information available, the Ghanaian government is getting the short end of the stick. Ghana gets about $200 million every year from royalties. So, let's assume that the transaction has a duration of 3 years. In 3 years, the nation will earn about $600 million, an amount which excludes future royalties. The deal in its current form is scheduled to run into perpetuity. Essentially, the country is mortgaging its gold royalties away for a meager $500 million. Why has the deal triggered so much controversy? Well, largely because it has so many red flags and unanswered questions. First is the tax haven element. Across Ghana, many people are wondering why a national transaction should be shrouded in secrecy. You see, companies located in tax havens are not obliged to disclose information regarding their investors. It's possible politically connected people from Ghana could end up buying the remaining shares ahead of everyone, and no one will ever find out. Another red flag is the location for arbitration. The City of London has been chosen as the venue should there be any legal disputes with the company. According to Tax Justice Network, arbitration in London is chosen by many parties because of the confidentiality advantages that are provided. The Ghanaian government stands no chance at winning a legal case against influential private investors with more connections in tax haven circles. Loss of tax revenue. Should the transaction go through, Ghana will not just lose out on its ability to collect future royalties, but also tax revenues. It's worth noting that under the MIIF Act of 2018, Agyapa Royalties revenues are exempted from Ghanaian income tax, duties, levies, withholdings, or other like payments. So, Ghana isn't getting any additional tax benefits by incorporating in Jersey. The Ghanaian government constantly complains of not being able to raise enough taxes. In 2018, it hired McKinsey, a global management consulting firm, to help boost its tax collection efforts. So, imagine how much the government is leaving on the table by exempting Agyapa from taxes. How many schools and hospitals could be built with that money? Also, the deal has high transaction cost. You see, the process of taking a company public is not cheap. The Ghanaian government will need the services of underwriters, accounting, tax, legal, marketing firms, and other experts, which comes at a hefty price. According to KPMG, typically, the cost of an IPO range between 7 to 10% of the amount of the funds being raised. We estimate that it will cost Ghana more than $10 million to list the shares of Agyapa. The Agyapa document obtained by Tax Justice Network shows Ghana has so far contracted the services of Merrill Lynch International, BMO Capital Markets, among others. How much fees have been paid to such entities? At this stage, we do not know. And could equally capable firms in Ghana perform the same services for reduced fees? Also, Ghana has a vibrant stock exchange. So why not list Agyapa Royalties Jersey on the local bourse instead of a proposed depository receipt? In 2019, MTN Ghana, the largest telecom company operating in the nation, raised $238.5 million in what was deemed the largest initial public offering on the local stock exchange. And with a population of 29.77 million, the Ghanaian government will need only 10 million of its citizens willing to invest $50 each in order to raise $500 million and still retain 100% ownership of the company. Ghana's Agyapa Royalties deal in its current form clearly has all the traits of a 21st century version of the transatlantic slave trade, when African tribal leaders sold their own kind as slaves to Europe and the Americas in exchange for meager items like gin and gunpowder. The difference is, the African tribal leaders are now called presidents, prime ministers, and finance ministers, and they continue to sell. This is Africa Wall Street. If you find this content valuable, please like and share it, and consider subscribing to our channel. Thanks for watching, and see you on the next one.